Sounds like an optimistic CEO here, but do the numbers live up to it when it feels as though the first quarter guide is a little bit light?
It is, and even this quarter, it looks like the print is very similar to Lyft. They were light on the volume side, so they missed by 100 million in terms of the total number of rides, and they made up on the revenue side through the Transplace acquisition they did in November. So really, if you look at the organic business, this isn't a beat in any sense. I think everything was light. Pricing was definitely a tailwind. That's what we saw with Lyft last night. And I think they are echoing the print that we saw from Lyft.
Okay, so we talk about the rideshare. The way that we talked yesterday, what differentiates Uber is, of course, the vast diversity of the business. When you talk about maybe freight, right, or Uber Eats, et cetera, are they benefiting still from people ordering?
Well, so I think you're seeing a deceleration in the delivery business. And look, it's not making any money. It's barely breaking even. And when you look at the outlook, there is no way they're going to be able to sustain that high top line growth. So there was a pull forward in the delivery segment. And clearly, you're going to run against tougher comps. But the question is, what is the synergy between mobility and delivery? And right now, we are not seeing any synergy in terms of, them driving more subscription revenue or just overall retention, and it's still a commodity business.
Well, I am curious about that synergy. I mean, I ride Uber pretty much every day, and they always send me sort of promotions for Uber Eats and some of the others, and I've never once, it just never even occurred to me. I mean, why? What do I care? But I guess the question is there sort of some overlap there that they do have with regards to their customer base where these two businesses do actually make sense coexisting?
Well, so what they're trying to achieve is really cater to the premium subscribers. They rolled out a new subscription. It's called Uber One. Basically, they're trying to bundle everything so that you use that subscription.
You're not premium enough.
I don't think they gave me that one. I guess I'm not important enough.
I think, look, I mean, right now, the switching costs are so low in this business that even drivers are cross-platform, users are cross-platform. They just gravitate towards a cheaper option. And
I don't understand how that's sustainable, though.
It's not, and that's why a lot of this business is subsidy-driven. So what we saw pre-pandemic was really subsidies driving a lot of volume growth. Guess what? Once they take out the subsidies, that volume is going away.
But did they try to do that? Because I remember when prices seemed to spike, and everyone said, "Oh, everyone's coming back to work." But it was a little bit more than that. I mean, you had significant increases. A $30 ride that I would normally have it was just inexplicably $50, $60 for a prolonged period of time, and then it dropped back down. What did they do there?
Well, so some people obviously accepted the increased price and they paid it. Others, well, and exactly, and so they have seen that sort of churn when it comes to the user base, and clearly they're struggling with the volume growth, which is why I said they really missed on that volume total number of rides number, and that's goes to show the organic health of the business.
They got to keep the price down. I'm really concerned. I don't want to get back on the subway. I'm scared of the subway.
Don't you have an electric scooter you could be using?
I'm scared of that too.
Can't you walk?
The streets are crazy.
Walking's free. Did you know that?
I'm all about the city bike.
It's a dangerous city.
Everyone worries
Haven't
about
you
me
listened to our mayor?